General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
All right, let me knock this workout. Notion. Eight 625. All right, news. Tomorrow is, I believe, unemployment. Let me get screen grabber. Unemployment's going to be big now. I know unemployment hasn't been big lately, but now that Powell's kind of like talking about unemployment, it should be big. The tariff news, it kind of shook the market at first with the India oil whole thing, but I think Trump was like, I'm going to add an extra 25% today, and it didn't do nothing. It was just, the market don't care no more. That first shock, though, gave us a good drop. And unemployment, 830 news, 830 red folder, Fed watch. Okay, we're back at 90. Okay, so I just got through talking about that. Like, we're gonna give him an extra 25. This thing has been going crazy since Trump was like the tariffs. None of the economic data has been pushing Fed sentiment. That's probably why like Powell's like, I ain't cutting rates, because he probably thinking like, man, Powell probably thinking Trump so unpredictable. Man, we just gonna wait for this tariff thing to be over. So they'll cut the rates with these tariffs. But it's still too early. It's still week 2 of August. I'll wait. I wouldn't even bet on it until NFP next round, when the next employment numbers come out. And by then, India would have figured out something. So we at 93% right now, but I won't count on it. This can pass over after the India tariff drama because they finna run with this. I think India got something to do with medicine. If the price of your medicine double, man, it's gonna be all over the news. It's gonna be panic. It's gonna be selling. Thursday, it's not no significant earnings. Yeah, nothing significant here. For me as a NASDAQ trader. That's the first time I wrote that sentence because I'd be like, yep, none of these companies matter. It's terrible. Dollar on the day. Okay, let's go. Down day on the dollar. Let's go. It's go time. Okay. That's what we want to see. Let's see. Okay. Then we got lower. I want to target range low. Unemployment tomorrow. Don't know how I will react. Labor market has been in trouble, but that was NFP. This is week 2, and we back to regular job numbers, and they may be strong, but the bias or the drawn liquidity for me is range low. All right, today. Okay, we took the highs. Target missed. We took this low, and then we took this high. Is this bullish or is this engineered liquidity? Oh no, wait. Let me just do this for the results. This is target missed. Where is the weekly candle going? Nah. This is a crazy week. Put this on bar replay. Let's go here. No. Let's just do this. Friday, Monday. Okay, so this is Monday's candle. It's Friday's candle. One candle over. This is Monday. Okay. This is bar replay. This is epic. Okay. Look at how it's weekly candle form. This is Monday. Okay, that's the link. Matter of fact, I don't even know if that's the correct link. OPLC. It's the old link. This is Monday. Okay. This is Tuesday. So we're on Monday. One day over is Tuesday. Hold on, wait. Oh, I was on a weekly chart. Let me do this. So boom, boom, Monday. So will this automatically be on Tuesday? Okay, I'm on a daily. Boom. So this is Tuesday. So go to the weekly. Hold on. Okay. All right, that's perfect. Yeah. So Tuesday was here. And on the weekly. No, there's no way. No, it couldn't look like that. Okay. This is it. This is what the candle looked like on a weekly. But over here, it's trying to tell me it looked like this. So something is wrong with this bar replay thing. Yeah. Because I remember this. So instead of doing it like that, I could just get the pictures from the logs itself. So this is Monday. Let me see if I can control C it. Okay. Okay, that's perfect. This is Monday. This is Tuesday. Okay, I can control C. I did it last time. Control C. This is Tuesday. That's perfect. All right, this is today. All right, so what would I ask myself? What levels is the weekly candle reacting to hold on, hold on. I was gonna say to determine the draw on liquidity, but then it's gonna be like 2-2. That'll be a hard read. Monday pushed up, big Monday. Tuesday pushed down, big Tuesday. Wednesday push up. Did we push higher than Monday? Let's see. We did push up, retrace, push up, expansion, retrace, expansion. Okay. Hmm. From a weekly perspective, it's not reacting to any major key levels, but this is definitely a start of a bullish week. Expansion, retracement, expansion. So, none is an inside bar. We seem to be bullish, but this week can still close an inside bar. So it's better to stay on the sidelines until order flow is confirmed. Today's Wednesday too. It's OSAC day. Like if you ain't in OSAC by Wednesday, it's OSAC is over. It's you scalping the rest of the days. Thursday, Friday. Thursday do get some OSACs or one shot, one kill, but not like. I mean, it's quite often. Thursday does do it. Friday never does it, but I think the best days is really Tuesday. Tuesday CPI week 2. Price has been sideways. No PD array is being respected. All right, let's go to the H4. I do like the H4 fair value gap. I want to see some type of respect here. You can see these volume imbalances from a long time ago. What is this? Previous weeks. Oh, it's a new week opening gap from last week. Are we there? This is a strong level above old all-time high. Let me make this range gold. Yeah, that'll work. Above old all-time high. This is the only real. Okay, we got one here. Yeah, these can stay. It's in, what's it, 5 weeks back, the new week opening gap rule? 1, 2, 3, 4. Yeah. So we'll see if we react off of this old new week opening gap too. But I like sales still. I don't think it's bullish. I don't think I need this gap here either though. It's just so much right here. Price gap down. Just sweeping liquidity. Yeah, I don't think I need that. This week is almost over too. For us to get down here, then by the time next week come, yeah, this would be too old. ITT say 5 weeks worth the new week opening gaps. A little bit higher. Higher for now. I'm not interested in buys. Um, let's try to make a case for a buy. I should have been trying to buy, but I believe, what's this, 1400? No, I was around here probably trying to sell around EQ. We're in premium. It don't make sense to buy. However, now I'm not interested in buys in premium mode. It's still in range. Bam. H1. I still got my same alert. I don't think I need a new alert. Friday's highs. We don't need this anymore. This is a small range day compared to the other day. It's good that we swept both sides of it. Okay. I just want to make sure this is not going everywhere. Hello EQ. Yeah, that'll work. I feel like they moved the time and stuff too. 1800. Yeah, that starts a new day. So this is the new day time. Should I tag this? Yes, I will. Tag this. This is Tuesday EQ. Good buy here. Go higher. Buys here is in discount. Low hanging fruit here for a target. We swept this. I do kind of like how we're forming, but a London sale up here, I would love. And low hanging fruit target was unemployment. Unemployment comes in bad. Friday NFP bad. Bad unemployment down. So bad unemployment down. It's target here. Previous day's low. I believe this is the old target I got to take off now. So it ain't just targets everywhere. Where is that target? Here it is. No, keep that target on. Yeah, I'll come back for it later. I believe Target is previous day's low. Large set at H4. Fair value gap. All right. Oh, let me look at silver. I already got let me export this. I already got good on EU. I just need to look for more re-entries. Let's look at silver. Let's go here. Let's go. Yep, that works. Silver. Today's what? Because the dollar's dropping, this should move, but I already know. I know silver be playing. Gold be playing too. The metals, they be playing. Commodities, I think in general, just be playing. I like this gap here for a buy. We didn't close above, so this is key takeaway here. Let's make this one solid line. We didn't close above. So crossing back under a low will be ideal. I would like to buy under here. So let me make this gray. Okay. And let me make this blue. That'll work. What can I use to be creative? Just do. I just do a buy under here, or just do a dollar sign. Yep, that'll work. I love this layout. This is like my favorite layout. Just the liquidity tools and the fair value gap by Nephew Sam. It's just beautiful. It's a beautiful layout. My personal layout got all the lines. Okay, let's see. Trading below. Today's what? Wednesday, Tuesday, Monday. Trading below. Mondays high would be ideal to buy from. Not interested in chasing. But I'm thinking it's due for a retracement because we didn't close above Tuesday's high. The wick is a sign. Hold on. Sign of weakness. There we go. And then when we get in a good trade location, I can be like, all right. Because I'm pretty sure right now you can make an excuse like, all right, this is it. This is over. I'm pretty sure there's like an inverse fair value gap somewhere or something to be like, this is it. Excuse me. I like how Monday's high, where I want to buy from, lines up with this order block. Yeah. Lines up with this inversion gap too. I think this is what, daily. Yeah. Let's make sure I address Monday's high in the text. Like Monday's high lines up with that order block. All right. Hold up. And then let's go to EU. Just, I've got the entry already. And then if you're in the Telegram, you've seen, I think I put the entry in the Telegram. Yeah, I did. Because it was just, I can copy. I ain't have to put the PDF. I can just do like, okay. We here now. This was like a little gap I was looking at. Oh yeah, we was right around here. It was like, oh, we sold at this fair value gap. You get scared when you be in a trade. Okay, market's open. We were tracing. What's this weekly open? This is the start of this week. Accumulated all week, pushed up. We could come back to weekly open. That's cool. Stops us here. Next key level is here. I think I can do this. I think this will work. Yeah, let's see how this works. Oh, that works. Yep. So I'm looking at that next. That fair value gap. Let's make this a little bit reasonable. Yeah, those highs are a little bit too big. I actually like this. I want to save this as a template. Save as DOL. This is nice. EU. Alright, so here, I'm gonna see how price reacts at that fair value gap. Still holding and looking to add. Okay. I like to see how price reacts at the H1 bearish fair value gap. Yeah. H1 bearish fair value gap. I want to add. But it's not time yet. I'm gonna give it room to breathe. And after stop hunts. After stop hunts. So I can get fair value. That's gonna be the plan. All right. Damn. Boom. Okay, cool. All right, that's that on that. Y'all have a good day. Peace.